Hey guys, welcome to Fam Future. So, this is going to be your education for how to make money every single day for the rest of your life out of these markets. Very simply, very easily, and in a predictable way. Okay. So, there's only about 4 hours out of the day, maybe 3 hours out of the day that you'll have to operate, right? Between 8:30 and 11:30. The best time is at right after 9:30 Eastern Standard Time, all the way to 11:30 Eastern Standard Time. Okay. So we're going to focus on that and that alone. If you focus on just that section, everything else takes care of itself, right? That's the most volatility. The moves are going the fastest and the easiest, and it's going and giving you your money very, very nicely, easily, and quickly. Everything that I back tested for any automation, anything like that, the most profitable times is at 9:30 to 11:30 Eastern Standard Time, right? So let's look at this. Okay, this may seem or look confusing if you've never traded before, but we're going to break it down all in this one video. Okay, and you'll understand it and you'll be able to execute it the first day that you actually come on. All right, so follow me here, okay? The way futures and Forex works, the further that you go in the right direction, the more you get paid. The further that you go in the wrong direction, the more you lose, right? So our job is to go into the right direction every single time, okay? There's going to be losses, no worries, but as long as we're going in the right direction, we're in good shape, okay? And then when it's blue, it's on you. When you're actually in profit, the numbers turn blue and it's on you. So we're going to do an example, right? So if you've never seen trading before, this is YM. There's only two ways that we get in, okay? You see little X's everywhere right here, right? You see these little X's? The blue ones means we're going up and we're going to press the blue button right here. It says buy. That means we're going up. That means, hey, look, I believe that this little stick is going to go up. All these numbers right here is just a ruler, right? It's just a ruler measuring how far you're going the right way. So think about it as going into a car and you got the GPS. This is your GPS, and we're navigating, right? The further you go, the more you get paid. So, for example, if we were to measure this and say from this little X all the way up, let's see how far we drove the right direction. If you look at this number right here, it says 155, right? It says 155 from here to here. It says, now it says 144. Hope you can see that. So what that means is that this car or price in these terms has driven 144 miles up. Blue is up, red is down, right? It has driven 144 miles up, and it took 1 hour and 30 minutes to do so, right? So in 1 hour and 30 minutes, it went 144 miles the right direction. We call those pips or points. Um, in futures, we call them ticks. So all of that means the same thing, miles driven in the right direction for you, right? So here we go. What we do to determine how much we make is we take that number and we say, well, we just went 144 miles up. So we're going to take that number and say 144 times however many dollars we're risking per mile driven, right? So, for example, you can say, well, I want $5 per mile driven the right way. Okay. Since we're in futures, let's make it even simpler because I'm going to go to Forex. But this equals 5 miles per $5 per mile driven. So we're going to go to Forex right now first. You'll see why I'm doing this right afterwards. But look, here's that same 144, right? These two are the same. There's two different markets. Same 144. So let's do it. You see how this says 20? So let's do that math. 144 times, let's say $20 per mile driven. And this number is going to be based on how big your account size is, right? So there's already a trading plan, then you know exactly what to use with what account size. But in this case, we're going to do $20. So this would be the math. Now let's do this. Let's go back to it and actually do it, right? That math is how much you would have made in profit, right? That you can take out, put in your bank account, everything. An hour and a half equals that. So here's the X. So if we press this button with the blue X, this is where we decided that we're going to be going up, right? We're deciding that, hey, look, I believe this is going to go up from here. Perfect. So the next one, we push, we go to the next. Couple minutes go by. Okay. So now we got here. So from here, right, where we set it, all the way up to here, where it is, that was 91 miles driven the right way, 91.7. So if we bring out a calculator, this should be very, very close to what it really is. So let's get a calculator real quick. There we go. All right, perfect. So it should be 20 times 91.79 miles driven the right way. I said $20. I should get $20 per mile. And there we go. See how that is very, very close? That's just about what it is, right? I might not have had the mouse exactly on it, but that's how that works. Okay. So maybe it's just 91 period, 91 times 20. Very, very close. So that's what that is. So when you're seeing this, all of this stuff, all of these little indications are just telling you which way to go. This is your GPS, right? If you've never traded before, this is your GPS. And it's just telling you which way to actually go. Okay. So there we go. And the way that you take the money to make sure that you keep your profit so it doesn't go the wrong way, this is a good thing to show. To make sure that it doesn't go the wrong way, you saw those red numbers. We said it was going up. If you didn't, you see this says TP, that means take profit. That means take your money. When that shows up, definitely take your money, or even before then, right? The way you do that is you press the little X or press flatten. That's how you take it. And when you take it, click it goes away and it comes down here, right? So you've taken your money. So all these little dots that say TP means take profit. All of these little pit stops are like stops on the way. So as we're driving up, guess what it did? It hit this one and then it hit this one, right? These are telling you where it has been before, so it's probably going to stop there at some point, right? When it does stop there, you see what happened. It went a little bit further and then turned around. You see that? And this told you, hey, look, we're going down, right? So more GPSing. So I hope that makes sense, right? At this point, we're using $20 per mile driven the right way. Okay. These little X's are letting you know when to press the button and when direction and what direction to press it. And these little dots are telling you when to make sure that you take your money. Okay. So there's only a couple different ways to actually get into the market. Get into the market means to press the button. We have the little X's, right? And that's this faded white. You see this faded white? The edges of these little X's, the edges of this faded white, when price goes outside of them, just like this did, and jumped out, guess what? That's when the X came up. So that's one. That's called a breakout zone, right? That's one of the two breakout zones that are on here, right? So there's two different ways to go. The other breakout zone, which is another place to actually make money, are these couple of lines here. Completely different than this one. Sometimes they line up, sometimes they do not, but it's just giving you another way or another option to be able to get into the market and to make money, right? So if we just glance at it, we know that, okay, when I take my little ruler and I drag it from the edge of this little white thing because the X came up, and I go all the way to the end of this little wick, this little line right here, how far did it go? It went down to here. We know that 45 times 20 is what would have been made just with this one, right? And we got another one here. It jumped out of these little blues, right? Out of these two lines. When it jumps out of this one up, you can get in there as well. So here's another. Remember that 9:30 time. Here you go. Let's measure that. That's 62 times 20. Or maybe it's times one. It depends on your account size. Maybe it's times 100 and maybe it's times 1,000. Some people are trading with millions. Some are with hundreds of thousands. Some are with 20. It depends on where you are. Regardless of what, you can always give yourself a pay raise as long as your discipline is up and you continue to just do this day in and day out. How many times do you need to do this per day? Once, maybe twice. And what's even better is later on in the course, I'm going to tell you how to set an alert so you just get a text message when this is happening or when this is happening, when we're jumping out of these two lines that you see behind it. I'm going to go to a day that gives an example of when they are not lined up exactly. Here it is right here. Maybe a different one. So you see how the edge of this is way down here and you got a little X here, right? Way down here and way up there. So this is an example of a day when this is not the same and you have two different opportunities to actually get into this market like that. So see this 10 a.m.? It jumped out there. But guess what? When you see these other two lines in the back, one orange and one blue, you see you would have came out of here a little bit earlier. You would have went in a little bit earlier like this, and you would have made a little bit more. So just let you know a little bit early, a lot earlier. So 107 times 20 for that one, right? So you get the gist of it. Same thing here. Jumped out earlier. That's 30 pips difference. That's 30 miles difference. That's $600 difference. It's letting you know earlier. And overall, it went 60, right, for that one. Then on this side, it did this. Came back up, came back out this way, then came right back down this way. It said take profit, right? 223 times 20, right? So that's what this does, okay? What I'll do is I'll make this a little bit more transparent so you can see a little bit easier. So we'll do 80 here. All right. So now you see the box is a little bit uh more faint, but the X's are still there. So now that you know what those are, that's what that does. So what else? What's this down here, right? This is called the ADX. What is it? Average directional movement. So this is like if you're looking at this black line, this is like the house, right? When both of these are down here, everybody's in the house. When both lines are down here, everybody's in the house. An example of that would be right here. Everybody's in the house. And what's happening? Prices are just going back and forth. Everybody is sleeping. It's not going far. It's not pushing. It's not going a bunch of miles. It's not doing any of that. It's sleeping. So when both of these are down here, it's sleeping, right? When one jumps out of it, whatever color it is the direction that it's going. So if you look, now this is 7:30 a.m. This is before the prime time. But if you look, for example, red jumped out of the box, jumped out of the house. And what happened? If we line it up, guess what? Price started going down and far and hard. So, hey, I want to sell. Guess what? When I say sell, that means go down. That doesn't mean you have to buy or sell uh, a commodity or a stock or anything like that. In stocks, you would buy one and you would hold it. And then when it finally got to where you're trying to go and it multiplied, then you would sell it. And here, buy and sell means up and down. That's all it really means. Buy and sell means up and down, which is why this, it says up and down, right? So guess what? The red jumped out of the house after they were in the house for a few, jumped up, then this happened. So let's go back to it and actually watch it happen, right? So watching it happen, not sure why it's going really slow, but here we go. We see it trying to jump out of the box, and there it goes. So as you saw, it lets you know ahead of time. And then what's happening over here, everything is saying down. So you have multiple indications for your GPS, letting you know what's going on. Now, where would we have got in? Guess what? It would have been about right here if we were doing this. have been right here. And then it stopped right at a pit stop. 181 times 20. All right. Now, what are these? And then here's your TP, letting you know, hey, look, take your money. All right. Now, what about these little arrows, right? What about these little arrows? These little arrows are based on this black line right here, right? This black line right here. So with this black line, it's just kind of, it's just going with the market, letting you know which way is kind of flowing, right? Which way are we pretty much driving? It's another indication about which way we're driving. You see, we were driving up for a while, then it jumped under here, came back to it. These candles are always going to play with this line over and over and over again. It's just going to play with this line. So it's just, if it's going too far from the line, it's probably going to come back to the line, right? That's just what it does. These little arrows are letting you know when it crosses over the line. So, for example, 2 p.m., here you go, it crossed over the line. That's a pretty good move. 199 pips in 3 hours to a TP, right? Here's another one here to this TP. Let's measure that. 35, right? This is 8 p.m. Again, we're not around this time. We're not around this time because there's way more going on around this time, right? So what did it do? It played with the line, played with the line, played with the line over and over and over again. TP, 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 right? So you see the significance of it. This is not a regular moving average. It's a culmination of a bunch of different calculations, and we call it regression, right? So that's that. So it jumped over here again, bam, 180. Jump down here, great. So that's what that line does. Okay, so now we have three different ways. We have these, and here's a good example where this is way further away. Here, this is all the same day. Woke up in the morning and jumped down on here and went crazy all the way down here. Guess what? This is at 5:30 in the morning. And before it even jumps out of here, it went 421 pips. 421 times 20 or 421 times whatever is what happened, which is why I'm giving you these to jump out of, and then also this. Because guess what? If we showed up at the computer around 9 o'clock, 9:30, right? If we showed up, we would have seen all of this already happened. And then we're here and it's just playing around, playing around, playing around with this line until it jumps out of here at 11:30. So you still had another opportunity. This is nowhere near in the game, but guess what? This is where it gives you another opportunity. And that's a great move. 249 pips right down to the bottom. Take your profit and you're good. And it went right to one of these lines, right? So that's the significance of having a couple different ways to get into the market. And you have some good ones. And even if you miss that, guess what? 12:30, it jumped over. 55 is right here. Perfect, right? Perfect. Then it came out again right here. Another 66, 70, right? And then if you missed that, this came here, another 188, right? So it's just giving you multiple opportunities every single day. And that's the whole point. This is a great confirmation. Where did it jump out? You see it jumped out right here. The cell jumped out right here, early on. Jumped out of the house and didn't come back in the house until all the way over here somewhere. And then jumped out of the house again to continue. Played back, jumped out of the house again. Meanwhile, all the buyers were asleep, sleeping for this whole time. Sleep. Woke up for a little bit, touched the line, went back to sleep. Sleep until here, right? So this is a great indication of what's happening, right? To go along with everything that we have here. So I'm going to go day after day and show you what these look like. And you can count up how many winning days there are. There's going to be a plenty of them. There's so many of them every single day. So this is May 28th. So let's look at it. You can see it at a glance. Here we go. Glance X, that's 7 a.m. Let's look at this one. This is 10 a.m. Perfect. 10 a.m., 10:30. That's a win right there. Clean. 1 hour, 30 minutes, 194 times 20 in this case. Perfect. What else happened? 9:30. Went right up. Bam. TP. 66. So between this, and you had to jump under this line, you see all the confirmations now. Now you see how it all comes together, right? Here's blue jumping out of the house. And what happened? It let you know early and did that. Then it jumped back in the house. And guess what jumped out? Red. You see? And didn't come back until here. Okay. So that's definitely a winning day. Definitely a winning day. Um, how much do you really need? You only really need 20 or 30 miles each day, to be honest. About 20, 30, 40 miles each day will get you right. I was watching a hedge fund training, and this guy, hundreds of millions of dollars under management, hundreds of millions of dollars under management. And he was talking to the interviewer and he was showing off his automation. And his automation was saying it had taken a trade at 1 o'clock in the morning. And he was just talking about it like, man, what a beautiful trade. You see that it got in right here and it got out right here. And it's a whole 20 pips, a whole 20 pips. Now we just saw, I don't know how many moves with I don't know how many pips or points, right? I don't know how many that we saw just now, but he's excited about 20. That's very important. Very important. But yeah, 20 pips he was extremely excited about. And you know, when you scale up and there's more and more money in that account, it's not $20 anymore. It's $200 per pip. It's 200 times 20. It's 100 times 20. It's 500 times 20. It's 1,000 times 20. So the thing is unlimited scaling potential as long as you're consistent doing the same thing over and over and over again. So you get paid and you get raises and raises and raises just for doing the same thing over and over and over again, right? Consistently. So let's look at another day. Okay, here we are. Here's our X. Here's another one as well. They doubled up right here for you. 10 o'clock a.m. What a great move. TP right here, 165. TP right here, 245. TP right here, 292. TP right here, 313. TP right here, 385. What did we need? We only really cared about this right here. This small little move right here would have been plenty. And if you have a big enough account, that's $1,000, right? If you have a big enough account, that's 1,000 or 2,000 or something of the sort. If you have multiple accounts, that might be 10,000, quite literally. There's a way to get 20 different accounts copied at the same time. So the math for that is this is just so that you don't have to try to hold these moves forever. You don't have to. It's highly unnecessary, right? So 20 accounts, say we were doing $20 per tick, right? In futures. So it'll be 20 times 20. That's $400, right? For the 20 pips, 20 miles driven the right way. Then you multiply that by 20 accounts. That's what that's worth. What is 20 pips? 20 pips is this. It's just this right here. That's it. That's it. This right here. Right. So let's make a little rectangle, a little box. And what we're gonna do is find all of the places where we'd have got 20 pips. Right? Let me find that. Let's draw a rectangle. Here we go. So this, let's measure it out. 15. I'm looking at the ruler on the right side. This is 20 pips. This. Let's zoom in. Then we do this. There we go. This is 20 pips. Okay. So this is 20 pips. Let's find 20 pips. This is 20 pips. This is 20 pips. This is 20 pips. This is 20 pips. Right? Let's zoom back out. This is just a good visual of what 20 pips is. And this is what will actually free you and give you as much money as you would possibly want. Right? This is 20 pips. Right? Off of that arrow right there. This is 20 pips. Off of that arrow right there. Right? Even if you're late. This is 20 pips. This is 20 pips. Here's another 20. Okay. So day after day, and it's not just that day, right? Let's go to a different day. Here's a different day. What time? Between 9:30 and 11:30 is best. So let's take this and find 20 pips out of that. Mm, let's see. This is 8:30, 9:30. All right, here we go. 9:30. It did this, jumped up here. There you go. There's 20 pips in here, right? Jumping over the black line. And it jumped under the black line. Here you go. Another 20. Even if you got in there late, right? TP, TP. It jumped out of the box. Here's your blue X. Here's another 20. There's another 20 if you got in late. Here's another 20 with this little arrow jumping over the black line. TP, came back, jumped under the black line. TP, right? Now, what about when it touches this black line and then jumps up, right? What about that? So let's see how far we went the wrong way. Say we went for the sell here and it didn't, and it pulled back, and it pulled back 40, and it came all the way back and then came down, right? Well, this is 7 p.m., so we're not in there around that time at all, right? Where are we? 4 a.m., 6:30 a.m. This must have been a short day. This was a short, this was a short day. So we're around 9:30. We're around 9:30 because bigger moves happen. You see? 20 pips here. Excuse me. This is 11 o'clock. Here's 10 o'clock. Here's 9:30. Right? Red jumped out here. Blue jumped out here. Blue jumped out here. Perfect. So I'm going to reiterate over and over in this video because I just want you to see it, right? I want you to see it and I want it to be just, second nature. So here we go again. Let's see, 8:30, 9:30. Here's 9:30. See, this happened early, early in the morning, right? But guess what? We got backup. Here's our backup. 20 pips. Here's our backup right there. Jump through the line. You see it's plenty of 20 pips in there. TP, came back down, came back up again. It's that. Touched the line again, went back up. So that's another great day. Is there a lot of guesswork? It's not a lot of guesswork in here at all. At the same time, you have help here and you have help here, letting you know what's happening and giving you confluence and some confidence that, what you're looking at is about to happen. 7:30 a.m., 8:30 a.m., 9:30 a.m. Here we go. All right, so 9:30, 9 o'clock, it jumped through here and jumped all the way up. Great. Well, here's your 20 pips. I don't know if you can see that, but here it is. Jumped out of here, 20 pips. TP, came back down. Came back down, Gave another 20 right in here. Plenty of 20s, right? Then did what? Jump back out of here, the blue line. Gave this, jumped out of here, the other line, another 20 here. Way more. Cool. So now that we know how that works, which is great, now we can do this. So recap, we got a few different ways to actually get into the market. We have the little X's. We have the jump overs with the blue arrows crossing this line up and down. Um, and we have this blue and orange line as well. Jump out of the top or jump out of the bottom. Okay. So those are three different ways to get into the market over and over again, right? At the same time, confluence, we're looking down here. Who's jumping out of the house? Red jumps out of the house, then that's happening. Blue jumps out of the house, then that's happening, right? So we see that if they're both in the house, then this is happening, right? Looks terrible. So wait for somebody to jump out the house or jump out of these, and that's that. This is also letting you know what's happening on all the different time frames, a few different time frames at the same time to give you extra confidence in what's going on, right? If we're jumping out of the box and we're selling right here, then we're going to want to see all of this being red. Same thing the other way, okay? So that's it. If you get very, very familiar with just one symbol, just one, see how this is blue and orange. If you get very, very good at just one symbol, you will be absolutely fine and you don't have to worry about anything at all for a long time, right? You see how this is all the way up here? It happened so early in the morning, 9 p.m. It jumped out of here and 9 well, 1:30 a.m. and jumped out of here. So it started extremely early this day. Normally, people wouldn't have anything to trade, or some people wouldn't have anything to trade, but we do because we have another option, which is again 7:30 a.m., 8:30 a.m., 9:30 a.m. Here we go. We lost our 20 brick, but here it is. That's 34, right? Jumped up here again, came back down, came over here, and jumped up here again. 95. So we still got a great move out of that, even though both of these were way out of range, right? Way out of range. Let's get our brick again, box again. Great. So if I go to the next day, now you know exactly what I'm going to do, what I'm going to look for, what I'm going to say, what time of day. You're gonna know, right? You're gonna know, which is great. That's what I want. I want this to be so repetitious, so repetitive that you got it. I don't care how advanced you are. I just want you to have it completely. All right. So here we go again. We jumped out of the bottom of this. That's at 7:30 in the morning. No worries. We jumped out of here. There's your 20 pips. That's at 8:30 a.m. This is 9 a.m. Here's your 9:30. Let's see what it did. Who jumped out the house? Red jumped out the house, right? And what did we do? We ended up going down. What does this say? It's all down. What's happening? It's all down. So here's your move right here, right? 9:30, it jumps through here. It goes how many pips? 20. It slams back down in here, right? Now, if we want to deal with stop losses, right? Stop losses, take profits, all of that stuff. Let's talk about that really quickly. The safety in this is that when we're dealing with this black line, the black line is our safety. We're not going to get in right at 9:30. Okay, that's what we don't want to do. If we saw this happen at 9 o'clock, that's something to do for sure, right? But right at 9:30, you see how this candle is? It basically just wigged out like this. It was like flies hopping out of a container after shaking them up and putting like 20 in there, right? It's gonna just go like this. You want to wait for it to chill out and then do something, right? So here, it pulled up to the line and then jetted. Guess what was not here? Buyers were asleep for the whole time. Buyers were asleep. So what does that mean? That means we were looking for some sales, right? So we're looking to cross that line down. That's what we were looking to do. That's what we saw. Okay, that's how that day would have been done. TP, there you go. So that's how that would have been done. Um, I'll take you a little bit further. Now that you know, now that you understand, now that you know what we're looking for, we know we got 3 different ways to get into the market. 1, 2, and 3, right?